Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up. And we're not quite closed yet. We're about 3:48 p.m. Central Standard Time on this Thursday, the 21st of February, 2019. You know, I was on today Fox Business News at about 2:05 in the afternoon, and Liz Clayman asked, she was watching everybody, and I'm listening to the talk of the market is down. So what? It's gone up 12% since Christmas Eve in a lot of these indices. So you get some down days. People, you don't go up every day in the stock market. If you thought you did, God bless you, but it doesn't happen that way. So I think what happened, and I'm going to stick with it, is to buy the rumor, sell the fact. This market has been looking for good news on a Chinese trade deal for months. It's got the end of it. There's memorandums of understanding, 6 of them being written. China today made it very clear they're willing to buy another $30 billion. The word is another in agriculture product on top of what they've already bought to start closing the trade gap. What we don't yet know is how close are we getting on intellectual property? How close are we getting on forced transfer of intellectual property? How close are we getting to Americans being able to invest? What about Visa and MasterCard being able to operate in China? Yeah, they don't. So you're looking at all this. These are things on the table. And what I suspect is the market had built in that things would be good, and we got up to the point where now they're at the memorandum stage, probably meaning they'll meet the president's test that they're getting close, and the March 1st deadline gets pushed back. That's all. I don't know that I'm right. I'll give you this much. The market's not prepared, and I don't think built in any manner, that these deals collapse and there's another round of tariffs right now. Could be wrong, but that's my own take. In looking at the market at this point, you can see that the S&P is down 2.5 points for the week. I don't call that this type of break that we had going into Christmas. I think you'd agree with me. When we look at where we're at, though, the market's done something. It's had a key reversal. Why is it not just an outside day down? And that's because it's the highest high of a leg in the market. And it made the highest high, took out the low of the previous day, and closed lower than the open as well. That fits all the characters: a lower close day, under the open, outside day down. So we have a first number that came in. But what about this number and where it's happening? If you're a regular viewer, how have I been saying that these resistance points are logical and that should be an area that the market has a bit of a problem with? That's all that I think is going on. Has the trend changed at this point? No. You still have the pattern on the swing line of higher lows, higher highs. That's bullish unless the market takes out 27.29. We have the 18-day average of closes over the 100. That is bullish because you've got what's called the short-term average over the longer term. Support fits into the area of 27.2375 down to the lower 100 average of 26.92. Now, to get there right now, you'd probably have to take out that last break low, which would nullify the swing line being in an uptrend. Where's been the resistance? Well, we've done this before. We ran the upper Bollinger Band. We had a break. We got up, tried to run it, didn't quite hit it in these times. Are you noticing? You missed the upper Bollinger Band, all these. Not as strong as it might have looked. And the logical spot for this market to pull back to and figure out is probably this gray line, the 200-day moving average, which acted as resistance for 4 days. You got above it. I wouldn't be surprised if you're back at it. In terms of momentum, you still have the embedded reading, which is the strongest reading in momentum I know of. So until the red line closes under 80, I think the pullbacks in this market are still being and going to be bought. If the red line gets under 80, it depends where it happens. If it happens under the 200-day average, then I'm going to look for the 18 to be hit. If it happens up here above it, all I'm looking for is the 200-day average of closes. In the NASDAQ, be careful. The market closed at the lower end of the day, an outside day down, 200-day average serious resistance, and when you reopen, the odds, unless you gap higher tonight, the odds are super strong you're going to lose right away and get under that 80 reading. If it stays like that, that puts into play price and the 18-day average coming together. More important, this market is on the verge of losing that swing line, being in an uptrend. The market that was stronger than those two because it was running right against the upper Bollinger Band is the Dow. I think you'd agree. Support, if it breaks down, the red line's the closest average, the 18. You still have the embedded reading. 200-day average, 100. So on pullbacks, I have layers of support. What I'll be watching is the Bollinger, the slow stochastics. If they lose their embedded reading, you could get a wave of profit taking in these markets. I don't look for the Russell to go much further. This is about where I thought. We were talking and I said, I think it's going to have trouble at the 200-day moving average. You have an outside day down, a key reversal day down. It still has the embedded reading. This means to me that while this is a resistance zone, we have not seen, at least until this momentum disappears, the end of buying on breaks. In the VIX, the market is still got the embedded reading to the downside, so rallies probably being sold. Now, I would have been a lot feeling better that we'd get more of a rally if you lose the embedded reading here had you hit the lower Bollinger Bands, because often you'll get the put writers when you hit that band. They try to come out at those 18-day average of closes. You'll hear me talk about that throughout the year. In the T-bond market, the break today carried the 145.17, not quite under this market, and by the end of the day, the market finished 145.21, still under the 18-day average, about 4 points off the low. You still have the pattern of higher lows, higher highs, but two things have happened. Number one, the market's gone sideways on you, unable to break through the upper Bollinger Band. Second thing, today the momentum, because you close under the 18-day average, the bias turns down, and momentum, my word was ahead of the other, has turned down. If you look at yesterday, you were just overbought. Now momentum's down. So this market has all of a sudden gone into a churn event. It's out of a trend. When we take a look at the 10-year note, you broke through today on the break load at 121.25.5. So the low here was 121.29. With today's break in the market, you now have a higher high, and I should have fixed these arrows, and a lower low. You are not trending. Momentum is pointing down, bias is down. You've gone back to a sideways pattern. In TLT, it's very evident what happened. This is how you looked yesterday, and you had not taken out this low. You had the higher highs, higher lows. You tell me where the market went up to and ran into the brick wall. If you don't see that Bollinger Band, get your eyes fixed. The market came down, got through this break low here. You're out of a trend. Momentum is down. Bias is down because you're under the 18-day average and you're no longer trending. In the dollar index, yesterday, you made your run at your lower Bollinger Band. You're bouncing. If this market were to close under 96.12 tomorrow, you could actually have this market say, you're in the downtrend, you've got downside bias, and momentum is pointing down. That's what it would take. Barring that, still a market that corrected, and we have to see what the next wave's going to be. Eurocurrency, it'd be the flip-flop here. Because the market pulled back, if you don't take out this low again and you were to get and close over the 18-day average, you could say that you're turning bullish. I'm not expecting, not predicting, none of that. I give you the what-ifs here. You got a higher high, lower low, bias down, momentum was oversold. It's in a correcting phase, and it's still oversold. Any reading under 30 that doesn't embed is oversold. In the British pound, you know, this one's a hard one. It's out of its downtrend. It's had a heck of a vertical price rise here. Are they going to get some type of deal? I'll let you figure that out, but I like to show it. In the Japanese yen, you've got your bearish embedded reading. You have bearish bias. This market's having trouble on rallies. The support of the 100-day average, if it gives ground, that puts into play the lower Bollinger Band. Until you lose the embedded reading, I say that the bears are still very aggressive in the market. In Bitcoin, where did you run into your problem? Right here, against the Bollinger Band that crept up to meet price. Now, the market is overbought. I'll still say, and notice, this is the March. I've left the February. Today, I think today or tomorrow is the last trading day. It might be tomorrow. I think the market has put in a near-term bottom, maybe a bottom, at 32.50. We have to wait and see what it's going to do. in Brent versus WTI crude. This rally is because one supplier, namely OPEC, along with Russia, is cutting production, while the U.S. is increasing production. We hit a record high 12 million barrels a day. I think it was last week. That's big numbers. So the differential between the two is widening as one supply's tighter and another is ample. Here's April Brent. It ran the upper Bollinger Band. Notice today the market closed at 66.94 under the upper Bollinger Band. Now let's go here. You were over the upper Bollinger Band on this day. You closed at 67.08 over. 1 day, 2 days over, 3 days over, 4 days over, and this day was over. So you had 5 days in a row. The odds of today being an up day, I had it at 0. That's exactly what occurred. All that means is that the market is now still bullish as can be. I want to make that clear. You still have the embedded reading. You're in a resistance zone and a support zone with the 100-day average. At any point you can get a correction looking for a top out of this. In fact, here's the best scenario. If you lose the embedded reading, the most I'm looking for is a challenge of the 18-day average of closes. So this market is still bullish, whereas the April WTI, our oil, is into key resistance here at the upper Bollinger Band, the 100-day average, and it's overbought. And it does not have those amount of days over this. It's an overbought market that's in a resistance zone. When I come to gasoline, it's in an uptrend in a resistance zone where it's trying to embed. Embed means you're keeping both these numbers, the red and the blue, over 80 at least 3 days in a row. Not there. Day 1, 2, today was the 3rd day. So on pullbacks from here, until the red line gets under 80, I'm looking for buyers in the market. And I think they're saying they might be able to come in at a better price than this. Notice where you're at in the nat gas. The market finished on a good note today at 270, 290, near the highs of the day. You had lost your downtrend right on this day. Right here. You took out that low. You were already, a market that was trying to get its momentum up, going to the 18-day average, and that's where it's still fighting itself as I see it. Now, what I do at 8:30 every morning is something that, believe me, I think it'll help you. If you're a regular watcher of this, why aren't you spending 26 cents a day and taking a look at my morning video where I'm able to say, buy here, sell there, here's a stop, here's an objective, throwing ideas out. And the whole idea is for those of you that are looking and questioning your own judgment, maybe my review each day on a technical basis of charts where I'm able to say, buy here, sell there, do this, maybe that's the nudge that you need to either confirm your own idea or say, you know, maybe I'm right. There's something bothering me and I can see what he's saying. That's the idea here, because I'm able to discuss the chart action, the active traders, the technicals, and throw the ideas at you. So if you're watching me regularly and you're not a subscriber, contribute a little. Take a look at this and see what goes on. How do you get to it? It's pretty simple. Our introductory price is $26.50 or 26 cents a day. It's $7.95 for 30 days. Take a look, and no, it doesn't jump crazy on you and all that. I keep it very well priced. Give us a call. You can go to our website under the word education or research, drop down the morning subscriber video, and away you go. I'm Ira Epstein. Have a good day.